Well, good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRNAM for Tuesday, May 30th, 2023. And our top story today, the U.S. debt ceiling showdown, just noise or cause for concern. And joining me now to discuss this and a lot more, Matthew Brenner is a Managing Vice President of Investments with Missionsquare Retirement. Matt, great to see you. Thanks so much for joining us on the program this morning.
Jeff, thanks for having me.
Yeah, and we're going to talk about the debt ceiling showdown. And Matt, as I was prepping for our discussion, it kind of felt like deja vu. Does it feel like deja vu to you? Does it feel like 2011 to you?
It does feel a little like 2011. And it also feels like all of these episodes over the past however many years, not only debt ceiling, but with the budget standoffs as well. And that is, I think, part of the issue that we're facing now is that the budget standoffs and the debt ceiling standoffs are somehow getting combined into one big messaging similarity, and the two are different.
Yeah, they are very different. And do you want to offer up some clarity? I mean, what does the debt ceiling mean? Because I think a lot of people, it's getting conflated, as you said, with some other issues, the fiscal spending, all that kind of good stuff. But what does debt ceiling traditionally mean?
Yeah, the debt ceiling it's almost an anachronism of something that is very technical, doesn't really have much, if any, impact on the actual functioning of government. But basically, it means that the government has previously authorized spending, and the debt ceiling is just confirming that, yes, the government can borrow the money to pay for the things that the government has already approved in previous legislation.
And Matt, so the debt ceiling, obviously it's an important part of government. We need that in order to run the federal government. Obviously you need money and you need a budget to do that. Let's talk about reaction because, and we're not going to wade into the politics. That's not really what our show or our topic's about. But let's talk about the market reaction if we can. I mean, how does the stock market typically react when this comes up? If you look back in 2011 and you look back today, does the market seem worried? I mean, there's so much going on that we've talked about with you and others, Silicon Valley Bank, commercial real estate. I mean, you can go, the list more than I do. But how has the stock market reacted to all this talk?
Yeah, well, each time something like this happens, the market's reaction gets a little more muted. And so in 2011, the thought of breaching the debt ceiling was very new, and the market was very concerned about it going into it, and even after the deal that was ultimately struck. But in subsequent episodes, the market has reacted less and less on the theory that, well, this is typical Washington noise, and it always gets resolved. You're seeing the market right now start to get a little more concerned because that's going to happen as you get closer to the deadline of the market saying, well, is this time actually different? But still, relative to the consequence, if there is no deal, the stock market has still been relatively calm.
Yeah, and let's talk about one last question before you go to a commercial break, because I don't want people to believe like it's the same as last time. I think we can't have that type of attitude. Again, my perspective, and that may not be your perspective, but what are the unintended risks and potential consequences of the debt ceiling debate, the discussion, if we miss the chance to formulate our budget and have an agreement between the White House, the executive branch, and the legislature, the Congress, and the Senate?
Yeah, well, Jeff, I do agree with you that it is something to take very seriously. And the consequences are both personal in terms of the payments that the government could make to individuals or not make to individuals, starting with Social Security payments, but certainly having to do with Medicaid payments. And all of those could very quickly flow through the economy. There is the potential for consequences in terms of the servicing of the U.S. debt that's already outstanding. But the belief is, and I think we agree with this, is that if the debt ceiling is not raised, that the government will prioritize paying the interest on existing debt to maintain the creditworthiness of the U.S., even as individuals bear the brunt of a failure to make a deal and pass it.
Well, Matt, as I said, I need to take a very quick break. When we come back, let's talk more about the unintended consequences and maybe what individuals and plan sponsors might want to think about. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Tax audits, tax liens, wage garnishments.
Every day we hear stories like this about good folks who are simply struggling to pay their bills. Each of them are living a frightening IRS tax nightmare, and they are afraid it will destroy their lives.
I'm a divorced single mom, and my ex-husband left me and the kids with a lot of unpaid bills, including unpaid taxes. I was really starting to show my stress on my kids because the IRS had sent me a letter demanding a huge payment from me. I couldn't afford it. So then the IRS was threatening to garnish my wages. I'm already living paycheck to paycheck. That would have put me over the edge financially.
It truly seemed hopeless, but then a friend at work told her to call the tax relief line.
The people at the tax relief line, they told me about something called innocent spouse relief. They worked it out so that all of the taxes from my ex are not my problem. I don't know how that works, and I don't care. All I care about is that I don't owe the IRS a dime, and they are not going to take my paycheck.
Even if it seems hopeless, you should call the number on your screen right now. There is absolutely no cost for the call or the consultation. You are under no obligation. If you are worried that the IRS could garnish your wages, seize your assets, even take your home, call us right now. The Tax Relief Line is here to help you. Now you have a knowledgeable, professional team of tax experts that are ready to negotiate with the IRS and fight for you to save you money. The Tax Relief Line's professionals have successfully negotiated thousands of cases, reducing and sometimes even eliminating the tax debt for their clients. It's very easy to get started. Simply call the number on your screen right now. You don't have to live in fear anymore. The call and the consultation are free.
Well, Matt, thank you so much for staying with us this morning. Really appreciate you hanging around for segment number 2.
Thanks, Jeff.
Yeah, and look, we're talking about a very important topic here, the debt ceiling. I'm so glad didn't chase you off, and we haven't lost a guest yet, so I'm really proud of that. Matt, I just want to pick up the conversation. We were talking about unintended consequences, potential risks. Let's talk about maybe if you're a participant. Let's talk about retirees. And you mentioned, I think, Social Security. What are some things that you should be thinking about if you're at or near retirement with respect to the debt ceiling?
So if you're at or near retirement, it is more of a present concern because if for whatever reason the debt ceiling isn't raised and some of the consequences come about from failure to service the debt or failure to fulfill some of the obligations, first thing you have to focus on is do you have present income or the resources to bridge any short-term gap while this is occurring? We don't think if for whatever reason the debt ceiling is breached that it's going to be a long-term event. The markets will almost certainly force Congress to act at some point, and it would be in, we think, a fairly short period of time. But if you're an individual just in retirement and looking to service your own debts, you have to pay your rent, you have to pay, whatever it is that you need for your medicine, for food, what have you. It's important to at least have a good little bit of savings that can bridge the gap in case you're relying on investments to cover that in the short term.
Yeah, really. Go ahead. I'm sorry, Matt. Go ahead. I interrupted you.
No, not at all. So over the medium to longer term, whether you're a retiree or someone who's a long way from retirement, we do think that this will even itself out if you have the patience and the ability to stay invested in the markets. But the short-term volatility could be a little disruptive.
Yeah, and I'm sorry, Matt, for interrupting you. I was going to say, if I'm a retiree, it would make me very nervous about my Social Security payment, Medicare, all the other things that I have paid into and rely upon, and now could potentially disrupt it. I need to think very quickly of a backup plan if necessary. Matt, what about longer term investors? And we always talk about in our industry, you got to think about the long term. You have to think about riding out these little troughs and these peaks and valleys that happen in the market. But how do you process this if you're a younger investor or someone who maybe won't need to draw down and won't be retiring anytime soon?
It's a great point. And the most important thing, if you're a younger investor or even a middle-aged investor like me, to remember that you're saving for the long term. Don't change your saving plan. You're investing for the long term. Make a strategic allocation and stick with it, because trying to time the market is very difficult, if not close to impossible. And if you try and figure out which direction the debt ceiling debate is going, you're going to have to be trading every couple hours right now. It's not the way to go about investing. Over the long term, all of this starts to feel like noise, and your longer term allocation is what's really going to drive ultimately the performance you're looking for and set you up for the situation that you want as you look towards your retirement in the future.
And Matt, just to kind of pick up for the plan sponsor, and they're the individuals that offer the program. They could be states, municipalities, for-profit organizations that are offering 457, 401k, what have you. What do they need to be thinking about? Because this the debt ceiling could impact the market, which would impact investments like mutual funds and other types of instruments in these retirement programs that they're offering.
Yeah, I think in a lot of ways the plan sponsors have to think about it the same way I laid it out for participants. Plan sponsors are looking to build a menu that they can offer to their participants, and they're looking to make the best decision they can as a fiduciary to offer appropriate investment options, and trying to adjust those based on the political situation in Washington or any other short-term issue that may arise is really not the best way to look at it. It's more, what is more appropriate for a longer-term investment option that we should be providing on our platform. And I think if plan sponsors think of it that way, then they can tune out the noise a little bit and look for investment categories and managers that share their view as to what it is that they're actually investing for, and are they looking to do things that are whipsawed based on the headline of the day, or they taking a more thoughtful, strategic approach that is aligned with the interests of their participants.
Yeah, a really good point. And many of these plan sponsors are fiduciaries. That diversification you were talking about, so important. And Matt, look, as a fiduciary, there's so many things to talk about. There's Secure 2.0, there's data and privacy. I mean, their fees, and right, there are so many things to talk about that have even a greater long-term impact. Matt, we're going to have to leave it there. Always great to see you. Thanks so much for stopping by, and we look forward to having you back on the program again very soon.
Terrific. It was a pleasure to be here. I look forward to speaking to you again.
And that wraps up this episode of BRNAM. Have a topic of interest, so many things we should talk to? Drop us a line, and don't forget, for all the latest curated news in lifestyle, wellness, finance, tech, so much more, and all in one place, check out today's edition of our daily newsletter, The Morning Pulse. Want to search our archives, check out our latest content, visit our website, and of course, all of our streaming partners. We're back again tomorrow for another edition of BRNAM. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes. Now is your opportunity to co-create content around any topic on the First Lifestyle and Wellness Network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device.